European countries are known for having some of the highest tax rates in the world, especially Nordic countries like Denmark, Sweden, Norway, and others like Germany and the Netherlands. But overall, the continent is home to several tax-friendly countries that offer advantageous environments for capital gains taxes, real estate taxes, income taxes, and corporate taxes. Some of these countries have attracted copious amounts of wealthy investors who seek refuge from taxation policies in their home countries. Having said that, there are a couple of ways to make sure that you don't have to pay any extra taxes in these countries, and it all varies according to your income, investments, or government subsidies. Furthermore, principalities and territories like Andorra and Channel Islands will not be mentioned in this video. Nevertheless, here are 10 tax-friendly countries to live in Europe. Number 10. Estonia. Estonia is an exciting financial center that can be classified as a tax-friendly country due to its low tax rates for non-resident businesses. It has a unique position while being in the EU. It is also the gateway to Russia and Eastern markets. It offers a low tax threshold together with quick incorporation procedures, low registration costs, low share capital, and you can incorporate remotely. However, it's still not entirely free from all taxation and requires transparency and proper accounting records. Its income tax is assessed on profits and are incurred only when the profits are distributed. Currently, it is at 20%. On the flip side, there are possibilities of exemptions depending upon your business and where you live. Number 9. Poland. Poland's tax rates on high earners are much lower than the European average because the government is trying to use tax as a tool to combat the impact of a shrinking and aging workforce and encourage more professionals to work in the country. High earners in Poland pay 16% less tax than the European average, but a non-resident must pay taxes on any income earned from their native country to the Internal Revenue Service, unless the person can claim a tax treaty benefit. This applies to students as well. In general, non-residents are taxed at around 17 to 20% calculated on their revenue. On the one hand, the lack of a wealth tax and relatively low tax rates make Poland an attractive place to keep personal wealth. Number 8. Czech Republic. The Czech Republic boasts a straightforward process for both personal and corporate taxes and is worth considering as a place to establish a foreign-owned business. Citizens of the EU may find it very attractive as a place to establish residency because it allows 15 to 20% income tax rate, which can be reduced to 6 to 9% for self-employed entrepreneurs. On top of that, residency in the Czech Republic is easily acquired by EU citizens, and after residing in the country for 5 years, they are entitled to apply for permanent residency. For non-EU citizens, the process is a bit more. A work visa will have to be obtained that requires an employment permit, although academics, artists, students, athletes, and service industry workers are exempted from this requirement. Number 7. The Ukraine. The Ukraine is Europe's second largest country, boasting a beautiful landscape with wide, fertile agricultural plains with large pockets of heavy industry in the east. While it's not one of the most popular tax-friendly destinations, it's certainly becoming more attractive. Ukrainian taxes are relatively flat rates. Both residents and non-residents pay the same. The standard tax rate of 18% applies to income received as salary and other benefits under employment and civil agreements. Foreign income and other income are not covered elsewhere. Furthermore, there's a flat 1.5% tax on real estate, which is one of the lowest in Europe, and foreigners can obtain a temporary residence card by purchasing a residential property. Number 6. Malta. Malta is a great option for anyone looking to pay fewer taxes, as the country has a number of programs aimed at specifically this. Taxes can get as low as 5% for non-residents and private companies thanks to several programs offered by the government. Unlike some of the other countries in this video, Malta allows entrepreneurs to establish residency in the country without actually needing to live there. Citizens of Malta are not required to pay any taxes on income generated outside the country as long as said income is not used within Malta. Furthermore, residents are also not required to pay taxes on foreign capital even if the income is wired to a local bank account. Other types of income are subjected to a one-time flat tax of 15% thanks to the country's tax-friendly programs. Number 5. Montenegro. At only 9%, Montenegro has one of the lowest tax rates in all of Europe for both personal and corporate income. Most countries in Eastern Europe are great for establishing a business thanks to their low tax rates, but Montenegro is probably your best choice if that's what you're going for. Unsurprisingly, a lot of entrepreneurs are now flocking to the country, and business there is flourishing. Furthermore, Montenegro has a citizenship by investment program, but it is phasing it out at the end of this year, mostly because it wants membership in the EU, and the EU is opposed to such programs. On the other hand, foreigners can still obtain a temporary residence card in Montenegro by purchasing residential property. Number 4. Albania. Albania is a Balkan nation in southeastern Europe, tucked between majestic mountain ranges and the Adriatic Sea. It used to be a place mostly avoided by tourists, expats, and investors. But thanks to the combined effects of positive change and ambitious goals, it's slowly making a name for itself as an expat and tax-friendly destination. Currently, it is quietly playing up its tax stance, generally a flat 10% on personal, corporate, and capital gains earned within its borders. And the government is actively seeking to attract foreign investment while becoming even more taxpayer-friendly. Moreover, it has a very low property tax. The rate is 0.05% for residential properties and 0.2% for commercial properties, and it offers temporary residency to any real estate investor who purchases a habitable property for their own use. Number 3. Serbia. Serbian taxation system belongs to the group of jurisdictions with lowest tax rates in Europe and remained well below European average corporate and personal tax rates. It has become popular tax haven jurisdiction for entrepreneurs, businessmen, digital nomads, and regional investors due to its business-friendly environment, low corporate taxation, friendly immigration policies, and easy residency options. Its personal income tax rate is 10% and corporate tax rate is 15%, and there's no official profit to turnover ratio, while its capital gains are separately taxed at the rate that is also 15%. Furthermore, there is no capital duty or payroll tax in Serbia, and property tax rates range from 0.4% to 2%, which is 2 to 15 times lower than the European average. Number 2. Hungary. Hungary is particularly attractive to non-EU investors who want to gain access to the European market through a cost-effective and tax-friendly EU jurisdiction. It has the lowest corporate tax rates in the EU, which apply to both trading and investment income. It also offers quick, affordable, and easy incorporation for foreigners. It's not officially seen as a tax haven, but its low corporate tax rates, easy incorporation laws, and prime location as a European Union nation make it an advantageous corporate vehicle for foreign investors. Furthermore, it offers a wide variety of tax advantages, such as a zero dividend tax and zero withholding tax. Its personal income tax is levied at a flat rate of 15%, while corporate tax rate is a flat 9%, which is the lowest in the European Union. Number 1. Bulgaria. Situated in southeastern Europe, bordered by Serbia in the west, Greece and Turkey to the south, the Black Sea to the east, and Romania to the north, Bulgaria has the European Union's simplest tax system with a flat tax rate of only 10% on personal income. Similarly, the corporate tax rate also sits at 10%, and thanks to the country's tax treaties, many international business owners can expect to be eligible for special tax treatments. Business people who are residents of Bulgaria can even reduce this tax rate of 10% to 5% using a smart but legal tax-efficient company structure. Furthermore, anyone can become a tax resident of Bulgaria if he or she resides in the country for more than 180 days in any 12-month period.